Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh dan salam sejahtera kepada semua. Terima kasih kerana sudi menghadiri sidang akhbar pada pagi ini mengenai prestasi ekonomi negara pada suku kedua tahun 2024 dan juga perkembangan moneteri dan kewangan oleh Bank Negara Malaysia dan Jabatan Perangkaan Malaysia. Bersama saya ialah Ketua Perangkawan Malaysia Yang Berhormat Datuk Seri Dr. Muhammad Uzair Mahidin. Sebagaimana kita sedia maklum, Jabatan Perangkaan Malaysia merupakan agensi rasmi yang mengumpul dan menerbit statistik KDNK ataupun GDP negara. As per our usual practice, please allow me to continue the presentation in English for the benefit of our international audience. Global growth in the second quarter of 2024 remained moderate, weighed down by high interest rates. Nonetheless, regional exports continued to recover, supported by both electrical and electronics and the non-E&E goods. Inflation continued to trend downward in the advanced economies. And let me now hand over the presentation to Datuk Seri Dr. Uzair to announce Malaysia's GDP performance in the second quarter of 2024. Over to you, Datuk Seri.
Terima kasih, Gambar. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Salam sejahtera. Pada suku kedua 2024, ekonomi Malaysia berkembang pada kadar yang lebih tinggi sebanyak 5.9%. Peningkatan ini didorong perbelanjaan isi rumah yang tinggi dengan pasaran pekerja yang positif dan sokongan langkah-langkah dasar yang lebih besar, pertumbuhan ekspor barangan dan ketibaan pelancong yang semakin meningkat, serta aktiviti pelaburan yang lebih kukuh. Dari segi pertumbuhan suku tahun ke suku tahun pelarasan musim, KDNK menunjukkan peningkatan momentum pertumbuhan yang lebih kukuh, iaitu 2.9%, lebih tinggi berbanding 1.5% yang dicatatkan pada suku pertama 2024. Berdasarkan pertumbuhan bagi sektor pengeluaran, pada suku tahun kedua ini, sektor services telah meningkat sebanyak 5.9%, sektor pembuatan meningkat 4.7%, sektor pertanian meningkat 7.2%, sektor perombongan 2.7% dan sektor pembinaan 17.3%. Manakala di peringkat demand ataupun permintaan, pada suku kedua ini, penggunaan isi rumah, household consumption meningkat sebanyak 6.0%, pelaburan private investment meningkat sebanyak 12.0%, public investment meningkat 9.1%, manakala public consumption meningkat sebanyak 3.6%, dan pada suku kedua ini juga berlaku turnaround net export daripada negatif 24.5 kepada peningkatan sebanyak 3.4%. In the second quarter of 2024, the Malaysian economy advanced by 5.9%. This was supported by higher household spending and amid positive labour market condition and larger policy support for the pickup in export goods and tourist arrival, as well as a robust expansion in investment activities. On a seasonal adjusted quarter-on-quarter basis, GDP show a stronger growth momentum of 2.9%, higher than 1.5% recorded in the first quarter of 2024. On the expenditure side, domestic demand was driven mainly by private sector spending. Private consumption recorded higher growth supported by positive labour market conditions and larger policy support such as payment of sumbangan tunai rahmah, withdrawal of Employees Provident Fund Account 3 and Budi Banani. The growth of household spending was attributed to higher consumption in food and non-alcoholic beverages, transport and restaurant and hotel. The growth in investment reflected robust capacity expansion by businesses as well as continued field asset spending by government and public corporation. Meanwhile, net export registered a positive turnaround due to the stronger export recovery amid higher external demand and global tech upcycle. On the supply side, Most sectors recorded higher growth except for mining sector. The services sector continued to expand with stronger growth in both consumer and business-related services. The favorable performance was attributed to the wholesale and retail trade, finance and insurance, and transportation and storage subsectors. The significant increase in manufacturing sectors was attributed to export-oriented industries such as petroleum, chemical, rubber and plastic products, and electrical, electronic, and optical products. Furthermore, the domestic-oriented industries such as non-metallic mineral products, basic metal and fabricated metal products, as well as transport equipment, other manufacturing, and repair also increased in this quarter. Meanwhile, the strong growth in the construction sector was underpinned by higher activities, particularly in the civil engineering and special trade subsectors. Growth in the agriculture sector was mainly driven by stronger production in oil palm and supported by fishery output. However, the mining sector recorded a lower growth following a production disruption in oil and gas subsector in the month of May. In the second quarter of 2024, the current account balance of payment recorded continuous surplus of RM 3.0 billion or 0.6% of GDP. This was underpinned by surplus in good account and improving export. The services sector showed favorable performance with a lower deficit of RM 4.9 billion. This improvement was mainly due to a higher surplus in travel, which stemmed from increased spending by foreign tourists in Malaysia and a higher surplus in manufacturing services. However, the primary income account recorded a wider deficit, mainly owing to higher earnings by foreign companies in Malaysia, primarily through dividend paid to parent companies. Meanwhile, secondary income account returned to deficit. On the investment side, FDI recorded a higher net inflow of RM 9.1 billion during the quarter. This inflow reflects higher debt instrument and equity injection amidst outflow in reinvested earnings by foreign firms. These investments were channeled mainly into the manufacturing sector, followed by services, predominantly in information and communication, and also wholesale and retail activities. The FDI were primarily from Japan, Singapore, and Hong Kong. In the meantime, direct investment abroad outflows registered a lower net outflow of RM 5.3 billion during this quarter. The main sector was services, followed by mining and quarrying and construction. Canada and the Cayman Islands and the USA were the main destination of EIA. Thank you. Let me now hand over back to the Governor. Thank you.
Thank you, Dr. Sri Dr. Uze. Let's move on. The external and domestic leading indicators point to sustained growth prospects for the Malaysian economy as we move forward. If you look at the left panel, the pickup in global orders will provide supports to exports. A higher value of construction projects awarded will translate into higher domestic activities going forward. And on the right panel, better business sentiments also suggest further confidence in the overall economy. With a strong performance of 5.1% in the first half of the year, we are of the view that growth for the whole year in 2024 could be closer to the upper end of the 4 to 5% forecast range. Household spending will remain the anchor of growth for the rest of this year, with continued expansion in employment and income, as well as larger policy support. And of significance, strong investment activities amid ongoing progress in the multi-year projects and favorable financing conditions, all this will continue to support growth. And from the external front, continued expansion in external demand will also lead to higher exports and tourist arrivals. Turning to Malaysia's external performance, exports is projected to expand further this year, driven by the improving external demand, global tech upcycle, and also higher tourist spending. Global semiconductor sales is expected to grow by 16% this year. This recovery in global semiconductor sales will be led by the memory segment, followed by logic chips. And this will augur well for Malaysia's E&E exports, given our established position in the global E&E value chain, notably in the logic chip segment, which account for almost half of our semiconductor exports. Meanwhile, travel receipts increased further to 22.4 billion ringgit in second quarter this year, or an annual growth of 37%. In particular, tourist arrivals from China and India have been forthcoming, and this is supported by the visa exemption measure that was introduced recently. In second quarter this year, tourists from China improved to more than 690,000 arrivals, or around 96% of the 2019 levels, while arrivals from India were close to 325,000, or about 165% of what we saw in 2019. Moving forward, travel receipts are expected to increase further, and this is driven by higher tourist arrivals and spending per capita, supported by the visa exemption for China and India tourists, and also the expanding flight network and capacity. Consumer spending remains a key driver of growth, and this is supported by the continued wage expansion and employment growth. Cash transfers, for example, the STR and the Adil Fitri special financial aid for civil servants, and the EPF withdrawals provided further lift to private consumption growth. And moving forward, consumer spending is expected to improve, and this will be driven by sustained positive labor market conditions, sound household balance sheets, and targeted policy measures. Importantly, growth was further supported by strong investment activity in both structures and machinery and equipment. Overall, investment registered a higher growth of 11.5%. First quarter, it was 9.6%, and this is supported by implementation of new and existing projects and the supportive financing conditions. And this is reflected in higher construction activities in both the public and private sectors during the quarter. And going forward, investments will be supported by further progress of implementation of key infrastructure projects and realization of approved investments. Infrastructure projects such as the ECRL, the Pan-Borneo Highway, and the Johor Bahru Singapore Rapid Transit System, the RTS, are actually progressing very well. And investment intentions remain forthcoming after the record high approval last year in industries such as E&E and ICT, including data centers. And importantly, between 2021 to first quarter this year, 77% of manufacturing projects are at various stages of implementation. So this is among the highest level of realization. And overall, the economy is expected to expand closer to the upper end of 4 to 5% range, but of course remains subject to risk from both external and domestic factors. The downside risk could stem from weaker than expected global growth, further escalation of geopolitical conflicts, and lower than expected commodity production. On the other hand, growth could be higher due to greater spillovers from the global technology upcycle and more robust tourism activity. In addition, faster implementation of existing and new investment projects could also lead to more robust investment activity and overall growth in the economy. Now let me turn to inflation. Both headline and core inflation edged up during the quarter, reflecting price adjustments by firms during the festive season, several policy measures by the government, as well as idiosyncratic price movements. Headline inflation increased to 1.9%, was 1.7% in the first quarter, and this mainly reflects the lag effects of adjustments to administered prices introduced in the first quarter, and this included the higher water tariffs, and service tax on electricity bills for high consumption users. Core inflation also increased slightly to 1.9%, and this is largely driven by higher inflation in information and communication services, following price adjustments by several streaming services companies in May this year. It is worth highlighting that as of June 2024, the impact to inflation from higher diesel pump prices in Peninsular Malaysia has been rather limited, with little evidence of spillovers to the broader CPI prices. Notwithstanding this, inflation is expected to trend higher in the second half of the year amid the recent rationalization of diesel subsidies. The impact would, however, remain manageable given measures by the government to minimize the extent of cost increases. Headline and core inflation is projected to remain within our earlier forecasted ranges of 2 to 3.5% and 2 to 3% respectively. And having said that, headline inflation has remained modest at about 1.8% during the first half of the year, and we believe that it is not likely to exceed 3% for the whole year as a whole. Bearing further shocks. Of note, the outlook remains contingent on further domestic policy measures, particularly on fuel subsidy rationalization, as well as risks from external developments, including geopolitical tensions and climate change, which could drive up global commodity prices. On the downside, lower domestic inflation could result from weaker than expected global growth. This may lead to both lower commodity prices and slower demand conditions due to weaker external demand. Turning to monetary policy, the MPC maintained the OPR at 3% at the July meeting. At the current OPR level, the MPC deemed that the monetary policy stance remains supportive of the economy. Our baseline forecast remains for Malaysia's growth to sustain its strength, supported by resilient domestic expenditure and continued improvement in exports. And as expected, we will see higher inflation in the second half of this year amid the recent diesel subsidy rationalization, but the increase in inflation will remain manageable. This is given that measures are in place to minimize the impact of the diesel subsidy adjustments on business costs. These key structural policies are crucial to be implemented amid a favorable domestic economic environment, further bolstering economic stability and sustainability. As these policy changes will influence our outlook, our focus remains on assessing the short and medium-term impact on domestic inflation and growth. As always, our monetary policy will remain forward-looking and data-driven. The MPC will continue to assess evolving conditions and the implications on the inflation and domestic growth trajectories going into 2025. The MPC will ensure that the monetary policy stance remains conducive to sustainable economic growth amid price stability. Let's move on to ringgit now. The ringgit has been appreciating as of late, with financial market participants expecting imminent policy rate cuts from the US Fed Reserve. This has softened the US dollar and elevated pressure on regional currencies, including the ringgit. With these latest developments, the ringgit has now appreciated year to date by 3.1% against the US dollar. Globally, the monetary policy path is shifting towards central bank easing, but it is important to acknowledge that financial markets remain susceptible to economic developments, including growth prospects and any divergence between market participants' expectations and central banks' actions. Other sources of volatility also remain, including the undercurrent of geopolitical tensions, which continues to weigh on investor sentiments. Nevertheless, the domestic landscape remains positive, and despite this shifting external outlook. A narrowing of interest rate differentials with the US would be conducive to inflows, especially given Malaysia's positive economic prospects. Furthermore, the coordinated actions between the government and Bank Negara Malaysia, which has already facilitated a better balance of flows, will continue to cushion pressures on the ringgit. In April this year, the bank rolled out a pilot fast-track pre-approval framework known as the Qualified Resident Investor or the QRI program. And this is to reduce frictions for corporates who repatriate and convert their foreign currency funds from overseas investments and seeking to reinvest abroad when the time comes. This is to ensure two-way flows in the forex market. The outcomes of the pilot were encouraging, whereby more than $1 billion additional inflows were seen entering the domestic foreign exchange market. And these additional flows have helped to provide support to the ringgit's performance, contributing to the recovery of the ringgit that we have observed in recent months. And in light of this, we are pleased to announce that from now until 31st December this year, this pilot QRI program will be expanded to accept applications from eligible resident corporates who have outstanding direct investment abroad assets of RM 1 billion and above. Further information about this program can be found on the Bank Negara Malaysia's website. Moving on to the bond market, the yield on 10-year Malaysian government bonds remained relatively stable on investor inflows ahead of financial market expectations of the US monetary policy easing. And on equity markets, Malaysian equities benefited from improved earnings prospects and rising confidence in the economic outlook. Let's move on to credit. Credit growth increased to 5.4% in the second quarter of this year, driven by expansion in both businesses and also household loans. For businesses, outstanding loan growth increased to 5.6%. It was 5.1% in last quarter. And this is driven by higher growth in both investment-related and working capital loans. This stronger growth was observed in the construction and manufacturing sectors. For households, outstanding loan growth remained forthcoming at 6.2%, similar to the first quarter, reflecting the sustained demand for loans, particularly for the purchase of houses and also cars. Financing by banks and DFIs continued to support the SMEs' business needs in the quarter two this year, with outstanding financing grew at an annual rate of 9.3%. In the second quarter as well, we saw double-digit growth in financing disbursement, and this is driven by the demand for working capital. The approval rates continued to be sustained at a high rate, indicating banks are meeting strong financing demand across all sectors, particularly in agriculture and the construction sector. The banking system continued to play an important role in supporting growth during the quarter, owing to their strong financial position, including robust levels of capital and liquidity buffers. Banks remain well positioned to support the financing needs of the domestic economy. The quality of business and household loans remains sound with stable impairment ratios. Newly restructured and rescheduled loans also remain low, and this has been supported by the prudent loan affordability assessments and provisioning practices by banks, which help ensure that banks have sufficient buffers to absorb losses. In summary, the Malaysian economy expanded by a faster pace of 5.9% in the second quarter of 2024, driven mainly by stronger private expenditure and further recovery in exports. With a strong growth momentum going into the second half of the year, growth in 2024 would likely be closer to the upper end of the 4% and 5% forecast range, although there are risks to the outlook from both external and domestic factors. Meanwhile, headline inflation is expected to average between 2% and 3.5% this year. With that, I've come to the end of the presentation. My team and I, as well as Dr. Dr. Uze and his staff, will be happy to take questions from the media. Thank you very much.
Thank you, Governor. At this juncture, I'd like to call for questions from the media. If you have any questions, please feel free to raise your hand. Our mic runners stand ready to pass you a mic. Please state your name and publication before sharing your question. We will take your questions in 3 segments as usual. The first on the economy, the second on the financial sector, and the last on any other topics. Now on to the first segment of questions on the economy.
Hi, thank you, Governor, and Dr. Sri Mohammed Uzair for your briefing. Just a few questions regarding the economy, and to clarify. So on slide 14, it's mentioned that headline inflation is not likely to exceed 3% for the year, barring shocks. Do you mean core inflation? Is that a typo? Or do you mean for the rest of the year? My second question is, with inflation remaining tame and the ringgit strengthening, how open is the central bank to help the government spur growth to higher levels through easing monetary policy, especially given the rate cut momentum globally with the Philippines yesterday as well? And my third question is, has GDP year on year peaked in the second quarter? And how concerned is the central bank about pessimism surrounding China's economy and resurgent fears of a US recession? That's all.
Thank you, Anissa. Maybe we'll take one more question in this round of questions. Gentleman on the right, Seichi from GG Press.
Hi, Governor. Thank you very much for your presentation. And my name is Seiichi from GG Press, a Japanese news agency. My question is about inflation expectation. With the diesel subsidy reform and the pending, another reform on the subsidy, how do you see the current situation of inflation expectation?
Thank you, Seichi. Governor will take these 3 questions.
Sorry for that. Thank you, Anissa, for the questions. I think quite a number of questions we have here. In terms of inflation, what we notice is that, as I mentioned earlier, it has been trending lower since this year. And this is in line with the moderating cost environment and the stabilizing demand conditions. And year to date, inflation has remained modest as we expected. And we did say that it's not likely to exceed 3% deadline. And the reason being that because of the reason I mentioned just now in terms of the moderating cost environment and also the stabilizing demand conditions. And year to date, inflation is about 1.8%, both headline and core. And so that's what we see for this year. It will be within the range, but highly likely it will not exceed 3%. Of course, barring further shocks that we foresee. That's number one. Second, in terms of the monetary policy, with the rate cut in the region, monetary policy, as you know, is forward-looking. And we look at not just what happens this year, but again, we look at the next 4 to 8 quarters. So we'll also be looking in terms of what happened in 2025. Second is that in terms of monetary policy in other countries, how we look into the economy is that how will this have an impact in terms of the outlook to growth and also inflation in the country. And of course, we will have to look in terms of the data as we come to the monetary policy meeting. We'll be looking at the inflation data, looking in terms of the market conditions data, looking at the growth outlook data. So this is what we'll be looking at, and also in terms of credit flows. And so that's why the important thing is that we want to achieve price stability that is with sustainable growth forward. So that'll be the guiding principle for us on monetary policy. In terms of has the GDP peak at this level of growth, 5.9%, this is actually the highest since the fourth quarter in 2022, where we recorded 7.4% growth. And that was due to the reopening effect. And we acknowledge that this current growth is driven by a number of positive factors, which I highlighted just now in my presentation. First is surge in investment. We see firm consumption. We see recovering exports, which could still continue into the near term. There was also some base effects actually, because I think last year, second quarter, the growth was 2.8%. However, We are also mindful of the specific one-off factors and risks that could also affect growth in the second half, particularly first in terms of the lag impact of the drier El Nino weather, which peaked in first quarter this year on all palm yields, which could dampen production in the next 3 to 6 months. Second is the scheduled maintenance activities in the oil and gas subsector during the third quarter, which could lead to lower than expected production. And third, in terms of the external shocks in the form of worsening conflicts, supply disruptions, tighter protectionism, and more volatile financial markets. And therefore, we are of the view that growth this year is still firm, and we are comfortable to expect growth that is closer to the upper end of our forecast range of between 4 to 5%. And of course, it's subject to the upside risk and also downside risk. If the upside risk does materialize, of course, it could be around 5 or even higher. But if the downside risk materializes, it will be within that range. Your fourth question in terms of concerns on US and also in terms of China, in terms of entering into recession, is something that we are monitoring the situation very closely. And in the US in particular, the recent market reactions to jobs data appear to be an overreaction, primarily contained within the financial market. However, markets have actually shown some recovery in this regard. And for Malaysia, given the deep and liquid financial markets and combined with our highly diversified economy, this will help mitigate any potential impacts of a slower growth in the US, similar to what we have seen in the previous episodes. Talking about China, our outlook has actually incorporated China's weaker growth performance following the prolonged weakness in property market and consumer sentiments in China. That said, I think China's growth in 2024 is expected to remain positive. If you look at the IMF WEO, it expected to grow at 5%. And again, our diversified export structure will certainly partially provide some cushion against any potential shocks coming from either US or China. Seiji, thank you for the question. In terms of the inflation expectation, as I mentioned earlier on, we have incorporated some element of substitutionalization in our projection. So that's why our range is larger, between 2 to 3.5%. And we believe, given what we have seen in terms of the impact from diesel thus far, quite limited, and the inflation should be within this range. And highly likely it will be within 3%, not more than 3%. Thank you.
Thank you, Governor. Maybe invite another round of questions on the economy. I think there was a question from Lukman, The Age.
All right, I'm Lukman Amin from The Age. I have two questions. The first question is, while you were saying that the impacts of a fuel subsidy rationalization will be muted, what about the impacts of what about the expected implementations of RON 95? Will it have impacts on the inflations? And do you expect the inflation to exceed 3% if RON 95 subsidy retargeted? And my second question is, while you were saying that the growth sentiments for second half of 2024 is a positive, so will BNM revise the GDP targets for this year?
Thank you, Lukman. Question from Norman.
Hi, Governor. Norman from Nikkei. You've been stressing on the need for structural reforms to strengthen Malaysia's economic floor, and also looking at the current economic situation. But do you think that the window of opportunity for these necessary reforms should be expedited?
Thank you, Norman. Governor, I think we'll take these three questions.
All right. Thank you, Lokman, and thank you, Norman. Let me answer Lokman's question on RON 95. As I said, the range of 2 to 3.5% has incorporated both diesel and also RON 95 to a certain extent. So it should be within the range. But at the moment, our view is that it should be around 3%. It may not be even above 3% inflation, given what we have seen. It has been behaving quite well, and it is actually playing to script. And of course, it's dependent in terms of the detail of the policy once it comes out, and we definitely will look at that. Second, in terms of whether are we going to revise the GDP. So far, what we got is the first half data, and it looks pretty good. Of course, I think we need to look further in terms of what happens during the third quarter. And any revision will be done when we come up with the budget in October this year. Norman, thank you for the questions on structural reform. Yes, you are right. Structural reform is very important, it's critical, and this way we will be able to enhance the competitiveness of the economy moving forward. And we have seen the benefit of what we have done recently. For example, with the initial reform we have undertaken in terms of electricity, in terms of water tariff, in terms of diesel. So this is where we are seeing some kind of like interest coming from the investors and also in terms of economic growth for Malaysia. So we want this to continue. And given the good growth numbers that we are having in terms of economic growth, and also given the moderated inflation that we are seeing, so this provides us a very good opportunity, a window opportunity for us to push further this reform, which will be beneficial for the economy as we move forward in the future. Thank you.
Thank you, Governor. May I invite another round of questions on the economy? Anissa from Bloomberg. And then, yeah.
Just to follow up on what you said earlier, Governor, so can I just confirm that your inflation forecast for the year is now around 3% and not 2% to 3.5%? That's all. Thank you.
Thank you, Anissa, and Daniel from Reuters.
Hi, Governor. Daniel from Reuters. I'd just like to confirm the number for the seasonally adjusted GDP figure for Q1 and then Q2.
Thank you, Daniel. Any other questions on the economy? A mic for Amanda, please. Amanda from TV3.
Yeah, on the economy and the revision part, because the Prime Minister just announced the increase in kenaikan gaji penjawat awam, so jadi adakah the full realization of the impact to the economy tu kan, adakah yang akan dilihat lagi pagi tahun ni ataupun tahun depan? Boleh ulas sikit. Terima kasih.
Thank you.
Thank you, Anissa. Inflation, just to be clear, our forecast range is still at between 2 to 3.5%. But given what we have seen in the first half, we believe that it will be likely not to exceed 3%. So given what we have seen, but of course, this is subject to the upside and downside risk as well. On the questions on the Q2, Q1, perhaps I think maybe I'll invite Dato' Uze to answer this question as compared to Q1.
Okay. If we look at the seasonal adjusted on quarter basis, Q2 growth is 2.9%. And this is higher than 1.5% recorded in the first quarter.
Thank you, Dato' Uze. Amanda, to your question on the salary revision for the civil servants, most likely we'll see the impact next year because this will be effective from December. And we'll look at the details of the announcement and then we'll be taking that into consideration in our projections for next year, both for growth and also for inflation.
About 6 billion will be injected into the economy. Maybe you could share with us any...
Okay. Of course, I think from growth perspective, it'll be positive. But from inflation perspective, it could be inflationary. But that's where I think the detail is very important for us to see in terms of the extent of the impact on both the economy and also on the on inflation.
Thank you, Governor. May I invite another round of questions on the economy?
Thank you, Governor. On the visit, the 4.3 target, is it achievable for this year?
Thank you, Mahanum. Any other questions on the economy?
Hi, just one question regarding the. I'm sorry if this was already answered and I missed it. So the embargoed statement that we received from BNM said that first quarter 2024 growth was 1.4%, but the slides say 1.5%. So can we be clear which figure it is? Thank you.
Thank you, Anissa and Shafika.
Hi, I'm Shafika from The Age. Just want to check on the ringgit. Is the recent appreciation of ringgit is sustainable? Thank you.
Thank you, Shafika.
I'll take the question on the fiscal. The government has committed to fiscal consolidation, and this year is 4.3. And of course, I think moving towards 3% by 2028. So that's part of the FRA. And we do see this commitment coming from both sides in terms of number one, in terms of the optimization of expenditure, and secondly, in terms of enhancing or raising the revenue. For example, in terms of optimizing expenditure, measures such as the subsidization is one of it, diesel. And in terms of raising the revenue, there is key in terms of the SST and also the other cukai that has been introduced in the past. And we do see the strong commitment, and we do believe that the government will work towards achieving the target as what has been indicated under the FRA. And so on your question, I think that Nazir will answer that, and Shafika on ringgit. Okay, I think and we have said many times in the past that ringgit developments is really due to external developments, particularly the interest rate differential. And we do see this as sustainable in terms of the recent developments that we're seeing now, partly because of the clearer path of the US monetary policy that will provide support because of the narrowing interest rate differential that will provide in terms of support towards ringgit, be positive. Second is that we also have tailwinds. Tailwinds, if you look in terms of the growth that we are registering now, stronger growth, and also the strong fundamentals. And we have seen interest from the investors in terms of acknowledging the fundamentals of Malaysian economy and also the strong prospects of Malaysian economy. And this again will also provide some support to the ringgit. And third, of course, the coordinated actions will also continue in terms of what we are seeing. And we are seeing positive, healthy flows into the forex market, both from residents and also from non-residents. In fact, we are seeing very strong interest from the investors, especially in the last couple of months, since July. And based on that, we believe that the ringgit is moving towards the right direction. And we do see this as sustainable.
Thank you, Governor. Dr. Sri.
The exact number is per show in the slide. 1.5 and 2.9. That's the exact number.
Thank you, Dr. Sri Uzier. Thank you, Governor. May I invite another round of questions on the economy?
Hi, I'm Fatin from RTM. At the current level, do you think that ringgit is still undervalued?
Thank you, Fatin. Any other questions on the economy? The lady in the front row, yes, thank you.
Hi, I'm Jana from Bernama. Governor, what's the comfortable level for the ringgits? And all right, thank you.
Thank you, Jana. Any other questions on the economy? Governor, I think we can take these questions together.
Let me just share this. To me, I see the recent strength in ringgit performance is some form of recovery from the past performance. And it is moving towards the right direction in terms of being more reflective of our fundamentals and the strong prospects of the economy. In terms of whether we have comfortable level for ringgit, we don't target a certain particular level for ringgit. It is market driven. But of course, what we have seen and what I've said earlier on in terms of the support for ringgit moving forward is positive, coming from the clearer path of the US monetary policy, coming from the coordinated measures between government and Bank Negara, also coming from the stronger prospect of economic growth for Malaysia and the strong fundamentals that we have.
Thank you. Thank you, Governor. May I invite another round of questions on the economy, if any? All right, maybe let's move on to the next segment of the questions on the financial sector. Any questions?
Hi, Esther from The Age. So my questions are relating to the Qualified Resident Investor Program. First of all, I would like to know whether this program is a permanent, will it be permanently in place or just a temporary one? Second of all, why could you explain why there's a need to expand it since the ringgit, as you said, has appreciated and you think that it's going to be sustainable? And then there's also a clearer path to the rate cuts from the US. And thirdly, is there an amount of repatriation that that Bank Negara is looking at under this program, or a certain level of where the ringgit will reach?
Thank you, Esther. Any other questions on the financial sector? Governor, maybe we'll take these three questions.
Thank you, Esther, for the question. The aim of this QRI program is really to reduce the frictions for corporates that bring back and convert their foreign currencies, and then later on they need to reinvest it abroad again. We started with the pilot program in April, and why we started this program is actually based on input that we obtained from our engagement with the exporters and also the investors. So they did indicate to us that they are okay to bring back in terms of the funds and convert, but they would like to have some flexibility in terms of ability for them to reinvest abroad when time comes. And what has happened in the past is that they feel there's frictions in terms of having to come to Bank Negara for approvals. Hearing those comments, so we kind of reacted to that and provided this flexibility to some of the identified exporters and also importers corporates. And we see this working very well. And that's why we are now expanding this to bigger number of corporates. And it depends. This could be something that is may naturally become one of the flexibility that we may provide to certain companies that is identified and apply for these facilities. And we have to see in terms of how this goes under the pilot phase, and how do we also able to address some of the frictions or some of the issues that comes out during the phase. And as I said, the need is really more in terms of coming from reducing the friction and ease of doing business for them as well. And we don't have any target level in terms of how much that will be repatriated or any level of ringgit where we will stop this initiative.
Thank you, Governor. May I invite another round of questions on the financial sector?
BNM has just imposed monetary penalty on two major banks because of their systemic trouble. And do you have any plan to strengthen the supervision in near future? And if so, how are you going to do it?
Thank you, Seichi. Any other questions on the financial sector? Shafika.
Just want to follow up on the Qualified Investor Resident Program. So why is BNM expanding the program when the ringgit is getting stronger? And how much more do you hope corporations will convert foreign currency into ringgit? Thanks.
Thank you, Shafika.
Take that question for Shafika. I've actually answered the question earlier on. I think why we do is more trying to reduce the friction for the corporates, because this is what we hear from them, and it's more of reacting towards their concerns, and we're providing them this flexibility, and we don't have any target level. So it's more providing flexibility, but what we have seen is that very positive outcome from this initiative. About $1 billion US dollar has been brought back and converted into ringgit under this program. Just to your question on penalty, I think as we have said many times, again and again, we will not hesitate to take appropriate supervisory and enforcement actions when our FIs fall short of our regulatory expectations. And this is one example that I think we take this very seriously in terms of the service provided to the consumer. And if they fail in meeting the timeline, the MTD, we'll take action against them. And we went through due process, and that's where we came up with a penalty for these two institutions. Maybe in terms of whether are we looking at further strengthening our supervisory approach, let me invite Sita to add on this.
Thank you, Governor. So our expectations for banks as far as operational resilience is concerned is largely guided by risk management standards for information technology that we've issued. And we expect banks to follow those standards. Where they fall short, as we've done, we will impose penalties. We have, in addition, also issued expectations and measures to combat fraud. So these are things that we do from time to time, and we will continue to do that. I think what is important is we are also increasingly focusing on strengthening the bank's capability to recover from incidents of disruption. I think we cannot eliminate entirely the possibility that these disruptions may occur from time to time, but what is important is the bank's ability to recover. Thank you.
Thank you, Governor. Thank you, DG. May I invite another round of questions on the financial sector? Esther?
Hi, Governor. Sorry. So, what about under the coordinated effort by the government and by Bank Negara? Is that also, what is there a target for it? How long will it last? And at what point do you see that, okay, maybe it's not necessary at this point?
Thank you, Esther. Any other questions on the financial sector? Mic for Amanda, please.
I'm talking on the penalty. So mengenai penalty kepada Maybank and CIMB, kudos for Bank Negara for now mentioning the names. And consumer nak tahu juga ke mana duit penalty ni dibayar. Is it ke pendapatan, coffers to BNM or the government? And the thing is, sebenarnya pengguna yang ada yang mengalami financial loss lah, sometimes either through even some corporate, some because of the business transactions, semua tu terganggu kan. So they have financial loss. So adakah Bank Negara akan keluarkan macam satu structure ke ataupun kepada banks so that macam pengguna ataupun pihak swasta boleh dengan bukti mungkin boleh reimburse that whatever financial loss through this system, affected system. Thank you.
Thank you, Amanda. May I invite another round, another question on the financial sector, if any? Okay. Sorry, Amanda, one more question from Amanda.
Sorry, I forgot. Maybe you could also share on the updates on the Sarawak wanting to own Afin shares. Thank you.
Thank you, Amanda.
Thank you. Actually, on the question regard to coordinated action in Bank Negara and also the government, as I said, we have seen positive outcome from this, and we have seen healthy conversion and effective activities. And this is something that we see is natural, partly because I think there's always an expectation when there's investment abroad, the income will be repatriated, and of course it could be converted. So what we are doing is encouraging that in terms of what they come to be repatriated and also converted to ringgit. And this will continue as we go along. And second is that under this coordinated action, we also do a lot of engagements with the exporters and also the corporates in terms of encouraging them to actually repatriate their export earnings and also to convert into ringgit. So this were part of encouragement to the corporates, and this will continue. And then from time to time, we'll meet up with exporters to remind them on this expectation. And so far, we have seen a very good response from the corporates. So basically, this part of the natural initiative we are undertaking, and this will continue. And secondly, as I said just now, while there's positive developments with regard to support for ringgit, but we're still in the recovery mode. And then in terms of the questions with regard to the penalty, it goes to the government consolidated fund, not the negara. And in terms of whether there is consumer redress mechanism that's already in place, right? So if there's any issue between banks and the customer, they could be taken up through that channel. Maybe
I mean, customers who may have been affected, the advice is really just contact the banks, explain, and the banks, we certainly expect banks to be responsive to legitimate complaints and to deal with that effectively. But if not, they can always approach some of these consumer redress arrangements. For disruptions, it's mainly not so much for disruptions because, again, the whole idea is the banks are able to recover swiftly. So any disruptions has been normally very minimal to affected customers.
On the third question, we normally don't comment on specific institutions, Amanda.
All right, thank you, Governor. Thank you, DG. I'm a bit mindful of time, so maybe we can invite one last round of questions on the financial sector before we move on to any other topics. Mic for Shafiqah, please.
What are the updates for the insurance co-payment plans which will take effect from September? Thanks.
Thank you, Shafiqah. Any other questions on the financial sector? Mic for Amanda, please.
Yeah, an update for the QRI program, right? The pilot projects and programs since April. How many exporters or corporates are involved in it, and how many you expect more by extending this program until December? Thank you.
Thank you, Amanda. Governor, I think we take these two questions.
Thank you. In terms of the co-payment, this is actually to provide a choice to the consumer. So that's where I think we have required banks, starting for September, to offer products with co-payment elements. So it's more as an alternative, a choice provided to the customers to provide these products with the co-payment features. Which what we have seen in the past, it could be cheaper to the consumer. In fact, I think co-pay premiums are generally between 20% to 68% cheaper than similar non-co-pay products. And then this way, we also have safeguards in place to protect consumers. For example, this co-pay will not be applicable during emergencies, and also for follow-up visits due to terminal illness. There's safeguards for the customers as well. And we have asked the ITOs to come out the maximum amount. And so that's why I think we're monitoring that as well, in terms of how do they behave in terms of providing this product and what is the maximum amount that they provided. And we believe it's good to have them decide on that because they would know better in terms of what are the customers' needs in terms of the products that will be co-pay features. Okay. And then on the QRI, at the moment, I think we have about 5, right? 9, 10. 5. We have 5. And then under the extended pilot, we're targeting about 30. Yes. Okay. For the 30, yes, they will apply.
Thank you, Governor.
I'm sorry, maybe Anna can add something on this.
So in the early pilot, the first pilot that we did, we 10 were invited and 5 actually joined. So half joined. So it is a choice for corporates that they take, and if they have interest, but if they don't have any excess foreign currency funds, they may not participate. It's still a choice. So the next this expanded pilot, as Governor mentioned, we've identified 30 to be assessed and also invited into the program for now. Thanks.
Thank you, Governor. Thank you, DG. Let's move on to the last segment on any other topics. Questions on any other topics, if any?
Hi, I'm Afrina from TV3. So there are 3 digital banks who have launched their banks recently, right? So there are 2 remaining ones which has been delayed, and it was reported that it was due to technical issues. Can you give some clarifications on that? And is there any timeline on when they're going to be launched? Thank you.
Thank you, Afrina. Any other questions from the media?
Hello, hi, Natasha from Free Malaysia Today. So recently, MCA President Wee Ka Siong said Bank Negara Malaysia should review its policy allowing financial institutions a total unplanned downtime of 4 hours per year and a maximum of 120 minutes per incident because he said the policy is too lenient. So do you think this is something that can be looked into? Thank you.
Thank you, Natasha. Governor, I think we will take these 2 last questions.
Answer the second part, Natasha's question on the penalty for the institutions, and I'll invite the judges to respond on the digital banks. I think for the penalty, as I said earlier on, I think we're very serious about this. And I think and we do take actions on the banks. And in terms of the 120 minutes downtime MTD, this is something actually is consistent with the international practices. So our expectation is actually consistent with that. And so this is where when they fail to meet that, that's where we take the action against institutions.
So on the digital banks, as you know, after the award of the license, they have to undergo what we call an operational readiness review. So for the remaining 2 banks, that process is currently ongoing, and that is just for us to make sure that the banks themselves to make sure that they're ready to open their doors for operations and offering their services to the public. And we ourselves will undertake a validation of their readiness before we allow them to go live.
Thank you, Governor. Thank you, DG. Thank you very much for all your questions today. We have come to the end of our press conference. Governor, may I invite you to give your closing remarks?
Together with Dr. Uze, we both would like to thank you for attending the press conference today. Before we end, I would like to invite you to 2 events that Bank Negara Malaysia will be hosting next week. The first is on the launch of the National Fraud Portal to be launched by our Minister of Finance too, which is a culmination of major efforts to automate the process of handling scam reports and tracing of stolen funds by the National Scam Response Center. And pada masa yang sama, Menteri Kewangan kedua juga akan melancarkan pameran seni bertajuk Batik Melirik Larik. Pameran seni ini meraihkan salah satu identiti budaya negara yang ikonik. Pameran ini merupakan salah satu usaha Bank Negara Malaysia bersempena dengan Hari Kebangsaan dan juga Hari Malaysia. Both of the events will be held on the 20th of August, next Tuesday, at Sasana Kijang. And I hope to see all of you there. Terima kasih. Dan akhir kata, selamat menyambut Hari Kebangsaan kepada semua dan terima kasih kepada semua yang hadir.
Thank you, Governor. To all our media friends, I hope you have had a productive session with us today. Thank you again for your time, and we hope to see you again soon.